Hi, everyone, and hopefully you're getting this message. I'm trying something a little new here, and if it works, and based on your feedback, it might be something I try to do on a frequent basis, just to keep you posted on what we do, what's going on in the market. We've had a lot of volatility in the last 2 weeks, and it's been since we spoke, and there's a few things that I think are so critical that I didn't want to wait until a couple weeks. I wanted to get something out to you. I've got the next program that I'm putting together is really just on technical analysis. I'll probably also do the options basics course as well. So those are more just background sessions, and I know that most of you are really dialed into what's going on in the market. So I wanted to put this out, get it out to you right away. And if you like the format, I'm going to post this on YouTube and keep it short and simple. And if you like this, let me know. And if you like it, it's something I could probably do a little more frequently to keep in touch with you, keep you updated on what's going on in the market. Now, first of all, first and foremost, I'm just going to open up a chart here. I want to get some charts and look at a few things. So hang on with me. And obviously today was a big day. This is the fifth straight week the Dow's been down. And so, or the major market's been down. So it's been a kind of a rough time for a lot of people. But it's only been rough for those people who keep trying to buy stocks and hope for things to go up. So I think one of the things I'd really like to make sure that each of you learn over the course of this year with me is how can I make money when things are going down? And that's really what the topic of this little short session is going to be. First of all, you got to recognize when things are going down, and how do we do that? Well, one of the easiest and best ways to do that is to take a look at some charts, and I'm going to give you a couple things to kind of keep an eye on. And again, most of you have access to charting programs, and so it's really easy to do. Let me take a couple things off here. Let's see. So I'd like to get rid of that Bollinger Band. Let's just clear everything off there. Studies. Delete all studies. Okay. This is just a basic chart. I've got some studies that are, or indicators, if you will, that I like to use. Let me just put the one on here. I call it my basic studies. Now this is the one I'm going to talk about this week, this next lesson, and I want to look at the market as a whole. Then I want to look at a couple stocks that we talked about in our last lesson. So the first thing I'm going to do is bring up the DIA. So that's the Dow Jones Industrial Average, and let's look at a 1 year. Actually, yeah, let's just look at 1 year. So here we've got 1 year, and you can see clearly nice big upward trend. But look what we've got going on right now. And let me draw a line there so you can kind of see. Let's see, trend line right there. So you can kind of see what's going on here. Right here is kind of the area where you could say we had, some support. And if we zoom in on that, where I've drawn that line, you can see that we've now broken through that just in the last couple of days. Now we had the big 280-point decline day right there, and then obviously we've had a little selling pressure the last couple of days this week. So those are first things that you're looking at. Now there's early warning signs, and if you're looking at this, I like to use a 50-day moving average. That's this purple line right here, and a 21-day moving average, which is the short-term line, this purple one, and a 60-day moving average, which is this one right here. 50-day moving average, which is this one right here. Well, notice that once the stock starts crossing those lines, that's when the warning bells should be going off. If you're looking at every stock in your portfolio, you should be doing this literally on a daily basis to see, are we staying above those moving averages? Now look back here when the stock was doing so well. See how it just kind of rode that moving average up? But again, when it breaks down and starts going through that first one, that's when the warning signals should go off. As it goes down, then we're out, and then you get a chance to go back in. Now I'm going to show you the indicators I like to use, and you can see that from right here, how do we know to get back in? Because a lot of people say, okay, Ross, if you're going to get out, how do you know to get back in? Well, right here, everything kind of lined up again, and I can't draw it through those other indicators, but if you look straight down below this line I just drew, We crossed back above that 21-day moving average. The MACD indicator, which measures momentum, went positive again. And the stochastics, which is a sentiment indicator and had been way down here in the oversold area, rose out of that area and started gaining strength. So the next thing to be concerned with is the prior high right here. And if the stock got up there, notice how it slowed down right when it got to that point. And then finally it went through and it did it on some better than average volume right around in here. You know, if we look at that next thing and up to the new high. Well, now we pulled back to the previous floor or ceiling, excuse me, that broke through right there. And now that's where the support was, and we broke through it. So where could we go from here? Well, obviously, if you drew a line, I would say probably down in here in the 11,900 range, maybe another couple hundred points from here is another key area of support. But everything's been beaten up pretty good over the last 2 or 3 weeks. So again, we may see some continued selling, and I want you to be prepared for that and protect yourself. That's the most important thing when you're in these kind of bearish trends is, by now the damage is done. But if you're looking up here and protecting yourselves, hedging your positions, or just simply getting out of things you made money on, then you don't have to deal with this heartache and challenge of when the market pulls back hard like this. So let's look at a couple others. The technology is the Qs. 3 Qs is a symbol. And again, I'm going to zoom in just in what's happened here in the last 6 months or so. And we've been in a little bit of a trading range, with the high being right around 59 for the Qs, that low that we hit back there at 54 in March. But overall, we're still right around 56 being support, and we're sitting right there right now. Okay, so that's a key area. I want you to be concerned about that. I want you to know about that. If you're holding technology stocks, those are things to keep an eye on right now. How do you protect yourself? Well, the best way to do it is just with a stop loss, because then if you're working or not watching, you can still get out very easily if that level's touched during the day. How do you determine where it is? If I were to draw a support line, and you would do this on all of your stocks right now, you should be doing this and always do this. That's protecting yourself is the most important thing you can do to preserve your trading capital. So if I put in a line that kind of shows me a level of support, I want to only get out if we breach that level. So I'm not going to put it right at that level, or what happens, you end up getting stopped out when you really didn't want to, right when the stock tends to bounce and start moving higher again. So maybe I go 5 or 10% below that. So if it's 56.35, maybe I go down here $1 below at 55, and that's going to get me, again, if we dip clear down to there where it bounced and went much higher on that deep candle right there, maybe 550. And that's the way I like to set stop losses. I don't go right at support. I go a little below it because I only want to get out if it breaks it. I don't want to get out if it touches it, because that might be where it bounces and moves higher. Very, very important. Now let's look at a couple stocks we talked about in our last live session. First, we're going to look at Dell Computer. We talked about that as potentially a covered call. And it had a sell-off. There's 3 strong days of selling after we got off that call. So again, if you did that play, if you sold the 16s, you had good protection and you should have been just fine. If you sold the 17s, you wouldn't have had as much protection and you probably have a little loss in that position. So what's going on right now? It looks like the stock's holding on. Again, just to draw the line in there, you can see this would be a level of support for the stock. It broke a little bit below that, but it seems to be kind of holding in there. And next level would be down here around $14 for that stock. Okay, I still have the cover calls. It's down a little bit. They expire, I think, next week or the week after. Actually, 2 weeks when we get on the phone, we'll be able to look at this and kind of see it in a whole month cycle. And that's part of the reason I chose those third Wednesdays to chat. But anyway, so I'm comfortable with the stock. You can see here the other part that I liked when I chose this one to show you was just kind of this trend that we've got going on. And where you can see that is a support line as well, and you can see the stock is still above that. So again, holding in there. Indicators have kind of gone through the worst of it with those hard days of selling a couple weeks ago. Another one that's on a lot of people's minds is EBIX, and EBIX is a stock, again, fundamentally I love because I know what they do and I know their business is growing. They had record earnings. And what's happened here, and just a story, not to bore you, but if you're interested in this stock and why I like to show it, even though that last couple of months doesn't look very attractive if you look at that. But the short sellers, and they kind of gang up on stocks, and this is the stock a bunch of the short sell groups have decided they want to gang up on. So there's about 10 million shares short on this stock. And what happens when you get a lot of people shorting a stock is, how do you get out of a short sale? Well, a short sale is when you sell the stock in hopes to buy it back later at a higher price. It's buy low and sell high, but done in reverse. So you've got 9 million shares, the people that now, if they started shorting the stock, up in here where the stock was really high, as the stocks drop, they're making dollar for dollar every penny that it drops. So now they've made a lot of money. I mean, gee, somebody that got it short at $30 or $29 or even $28, now it's down to $17. They made $10 a share on 1,000 shares. They've made a $10,000 profit. But how can they ring the register? How do they get that real money out of that trade? They do it by buying shares. Well, the buying is what's going to fuel a recovery in a stock that's beaten down, like EBIX in this case. Now, if we were looking at covered calls and we were right in this range of $21 to $22, and then we had a dip right after that, it held for a while, and the last 3 days have been just awful for this stock. But we saw an encouraging sign today as the market went clear down to $16 and then recovered very strongly near the close to come back. It still finished down. I don't want to sugarcoat that, but it's still finished down. But that was a sign of, with great big volume spike down here, you can see that maybe we reached the point of what they call capitulation, and so we can start building a base coming back. The stock is selling at such a low PE. They're making great money. They're growing their earnings, and it would be considered by any value investor's measure a very cheap stock. So that's what kept that one on the radar. I'm still playing it. I actually today, when the stock was down low, they actually picked up a couple calls. So we'll see. Strategy I like to use, I call it stock repair. When I got a stock that drops a lot, then I'll buy some calls because they're cheaper than buying more shares, and that brings down my average cost. But it also gives me the ability to sell more calls to cover those up and offset some of that cost, but still give me the upside potential. So if there is a bounce back, I'm going to recover a little faster. Anyway, so there's an update on EBIX. I mentioned this stock just in passing, Cena. Cena was down hard today after a great recovery that we saw just in the last week or so. So again, I didn't look at the news today, but I did notice that down almost 11%. It's a Chinese-related company. It performed pretty good, but we're sitting down here again. Support being in this area of $100. We're still above that, but kind of gave back all the gains in the last week in a single day. So anyway, there's an update on a few of the stocks. A little word of warnings for you to protect the positions you have. This is not a time to be looking to pick bottoms and try to find new stocks. This is the time you manage the stocks that you hopefully have made a bunch of money on as they've gone up over the last 18 months. And we're going to be learning strategies that you can use in these types of situations to make money off falling stocks and again, protect the stocks that you have. So anyway, there's a quick update for you. A couple sessions I'm working on to get out on technical analysis and also the options basics for those of you that are new to options. Look for those. They'll be out this next week as I wrap up recording of those. But anyway, let me know what you think of this idea. Just a quick market update posted to YouTube so you can take a look at it. Just a few of the things, ideas that I've got, things I like, things I'm watching, and just a general update on the market. If you find this helpful, let me know, and I'll continue to do it. But that's the update for today. Thanks for listening. Have a great weekend, and I'll talk to you soon.